Okay, we're opening up. E from MarketWizards.com and eMoneyWizard.com. Reminding traders to use risk capital you can afford to lose. And it is just about the open on Monday, the 22nd of June, 2020. Here's our daily predictive chart. And the bottom line, sidelines for this open for a couple of minutes. Remember, the goal is to get our VIG. There'll be a lot of traders who more than likely will want just short. I think it's a two-way open. Convenient trade is short side. And I think that aggressive shorts have to be careful about expecting too much on this open. Half gap should be 69.5. And I'm assuming that's aggressive support. We've come a long way. From Friday afternoon, this high. So this, we know that this low, this gap area, we're going to assume that this is our support until proven otherwise. And anybody that wants to short, we talked earlier about this 82 area being an important inflection point, really. So if you're using the aggressive zone, 82, 85, don't think about it as a home run trade. Try to get a couple of points in your pocket if you're shorting there, and no idea if that will even pan out for anything meaningful at the open. We've had this long run. I'm just feeling that this area either holds, or if not, then we're going to go back and visit up into that 92 area, perhaps. So if you're trading this open, think about it as a risk two, make two type of proposition. And you can see where our daily predictive, this 85, 86 area, this yellow circle, and then down here, this 66, which I think is supportive for now. So we're running into these moving averages, and that would tend to give you the feeling that you could come this way. But I'm not giving a big advantage to the shorts for that. I just feel the fix is in. So I'm thinking 72s. If you can get 72s, take it and run. I said that pre-market, and we still haven't touched those 72s. And as we look, that's the monthly middle at 72.25. So that's kind of a hidden pivot. $72.25. So if we can get down to that 72s, great. If not, take your stop out. You're going to need several entries. And we looked at this chart. This is where we said our primary range, we thought. Get paid, get something out of this if you've shorted. Bingo. This is where we said, let's play these three boxes first. And I've got 71 as our 40 back. Reminding you of this chart that we looked at pre-market, 69, bottom of, at the top of the pipe and the bottom of this range, paid for sure, coming in 72 to 69s. Half gap I've got at 69.5. Do not think about this business as one where you need to have home runs every swing of the bat. Get something out of these trades. You take risks, get paid. And don't forget the importance of Friday's low. I'm assuming that this is the first primary target. And if we're lucky enough to get to the 62s to 60 gap, that's huge. I'm not thinking we're going to get that all one swing. We could, but that's not what I'm thinking. I'm thinking we're going to get a little much more neutral open. Let's go take a look at a couple other charts we have not looked at yet. And this is a 2-day chart. So this is why I thought we wanted to use this 31.01 to 05 as our resistance. Stop was back here, we said. The middle of this is at 85, 86 area. And then obviously the bottom of the pipe, if we could get to the 71, 72, yippee. Below that, good fortune. Anybody short of those 82s, great trade. Convenient trade, short side, towards the gap. Gap is back here at 60 and a half. Anybody that's buying today, you're going against a 2-day trend, but you're going with the day's trend because the day realistically has been long side, and this is a contra against it until we break the lows. And we know that we've got a fairly strong bounce because we did more than a 4, did more than a 5, but not more than a 6. So that's why I'm thinking this is a somewhat neutral open. And if your first trade of the day and of the week is to get yourself 10 points, 8, 10 points, lock it. That's more important than another 5 or 6 or 10 even, just to get on the scoreboard. Nice trade if you got it. And if you didn't, there's plenty more coming. And my suggestion has been hit and run. And note how each and every one of the charts, I'm using the same framework of trying to understand where resistance might be, where the arguing box might be, and where the next support box might be. And I try to be disciplined to use that idea over and over. Note this 15-minute chart we talked about. Got to get it under the blue line. We've done that. Half gap has been hit. Anybody with a trailer, good fortune below this 72 to 69. And I'm looking at this yellow circle right here in the daily predictive box. You can see 66 and a half area supportive, and we know that 46.75 is our flipper today. Resistance back here, 05 and a half. Aggressive resistance, 86. And obviously, if we can get to that 66, home run. So anything below this yellow circle is good fortune territory, and that includes getting to the gap. Correct trade was convenient trade, and it works out. and green, red, blue. Rain line above us. So as hoped, running into the moving average would slow us down. I'm still thinking relatively neutral open. Got through that 71, 72 area. We still have not been able to get to the 62s, which are the middle. And we usually like to give the market first half hour to try to get to the half gap and the gap. IB certainly to try to get to that gap. And now we're going to take this line. I'm going to move it here as a reminder of Friday's low, because that's all important today. And these lows right here are the key. If we break those, then anything goes down here. Nice trade. If you got it, good luck. Lock it in your pocket and decide if you want to engage yet again. If you stayed sidelines and didn't want to take the trade, that's okay. There will be others. But the correct trade was convenient trade. Try to come back towards the middle. I relax a minute. We'll take a look at a couple of the charts. You guys that are thinking about options, a reminder. A lot of times what they'll do after options X is they can run it back a bit, and they got themselves time to square up and got a whole month. So if you're playing the weeklies, you have a little bit better edge, I think. Our assumption pre-market is 60 was supportive. Our assumption was the 100 area was resistance, and we said that we thought we would probably open up somewhere around this 80. It was just strictly a guess, but it made sense. All right, we'll do another video in a couple of minutes. It's a good open. It's a really good start to the week.